You know, society has a very distorted view of what it means to be wealthy. The average person looks at a celebrity with a fleet of exotic cars, a closet full of designer clothes, and a massive mansion. And they think that right there is peak wealth. But the brutal truth is, those things aren't wealth. They are just the expensive exhaust fumes of actual wealth. While the middle class is busy spending their entire paycheck trying to look rich, the actual elite are quietly accumulating something completely different. They are buying the engines that generate the money in the first place. They are hoarding the most productive, lucrative, and untouchable assets on the planet. And they do it using a specific set of rules that the rest of the world completely ignores. Today, we are pulling back the curtain. We are going to show you the exact psychology and strategy behind why the rich own the most wealthy assets, and how they stack the game in their favor so they never have to worry about money again. Welcome to Orionics, the place where future billionaires come to get inspired. Number 1. They understand the stark difference between an asset and a liability. Let's get this fundamental truth out of the way first. Most people genuinely do not know what an asset is. They think their personal home is an asset. They think their car is an asset. But the wealthy define an asset by one simple, ruthless metric. Does it put money into your pocket while you sleep? If it requires you to pay for maintenance, taxes, and upkeep without generating any cash flow, it is a liability. It is draining your wealth, not building it. The rich focus their entire existence on acquiring vehicles that produce capital, like dividend-paying stocks, commercial real estate, or profitable businesses. They don't buy things that cost them money. They buy things that pay them. Number 2, they purchase the infrastructure, not the end product. When a gold rush happens, the people who get the richest aren't the ones digging in the dirt. It's the people selling the shovels. The elite apply this exact same logic to their asset accumulation. They don't just invest in the hot new app or the trending consumer product. They buy the cloud servers that host the app. They don't just buy goods. They buy the logistics companies and the warehouses that transport those goods. They want to own the toll roads of the economy by owning the infrastructure. They guarantee that no matter which specific product wins the market, they still get a massive cut of the transaction. Number 3, they weaponize other people's money. Look, okay, poor people view debt as a life sentence. And if you are using a credit card with a 24% interest rate to buy shoes, it absolutely is. But the wealthy view debt as the ultimate wealth multiplier. When a billionaire wants to acquire a massive cash-flowing asset, they rarely use their own liquid cash. They go to a bank, secure a massive loan at a ridiculously low interest rate, and use that borrowed capital to buy the asset. The cash flow from the asset pays off the debt, and the wealthy investor gets to keep all the equity and all the profit. They are quite literally building their empires using other people's money. Number 4, they acquire assets that scale infinitely. If your income is tied directly to the hours you physically work, you have a hard ceiling on your potential. You only have 24 hours in a day, right? The rich know this, which is why they acquire assets that have zero marginal cost of reproduction. They build software. They write code. They create digital media. or they acquire intellectual property. Once the initial asset is built, it costs basically nothing to duplicate it and sell it to a million different people. They separate their physical time from their financial output, which allows their wealth to compound exponentially. And making that mindset shift from trading time for money to building scalable assets is incredibly difficult if you don't have the right guidance. And that is exactly why we built the Orionics app. We wanted to give you the exact playbooks that the ultra-wealthy use to scale their net worth, directly from the experts who actually did it. Inside the app, you'll find daily coaching sessions and full-length masterclasses on wealth creation, investing, and entrepreneurship. It is basically a high-performance mentor right in your pocket. And because you are here with us today, if you download the app and scan the QR code on screen right now, you will get an exclusive 25% off your yearly membership. Invest in your own education, my friend, because that is the one asset that will never lose its value. I'll see you on the inside. All right, moving on to number 5. They optimize for absolute scarcity. Economics 101 teaches us that when supply is low and demand is high, prices skyrocket. The ultra-rich don't buy things that can be mass-produced in a factory. They hunt for absolute scarcity. They buy prime coastal real estate where no more land can ever be built. They acquire fine art from deceased masters because the supply is permanently capped. They buy rare earth minerals and water rights. They know that as the global population expands and the economy inflates, anything that is strictly limited in supply will mathematically have to absorb that excess capital. Scarcity is the ultimate moat. Number 6. They use holding companies to shield their wealth. When you look at a billionaire, you are not looking at a person. You are looking at a walking web of legal entities. The rich do not own their most valuable assets in their own name. They own them through LLCs, trusts, and holding companies. This strategy does 2 incredible things. First, it offers elite liability protection. If something goes wrong, the holding company takes the hit, not their personal bank account. Second, it allows them to move capital around, reinvest profits, and compound their wealth in highly tax-advantaged environments. They control everything, but legally. They own nothing on paper. Number 7. They embrace asymmetric risk. The middle class is terrified of losing, so they play the game of money on defense. They save their pennies and avoid anything that looks risky. The wealthy, on the other hand, actively hunt for asymmetric risk. This means they look for investments where the potential downside is strictly limited, but the potential upside is completely uncapped. If they invest $50,000 in a startup, the most they can lose is $50,000. But if that startup becomes the next unicorn, they make $50 million. They take dozens of these calculated bets, knowing that one massive winner will completely erase all the small losses and build generational wealth. Number 8. They secure access to exclusive deal flow. Here is a harsh reality of the financial world. The best deals never make it to the public stock market. By the time you hear about a revolutionary company on the news, the real money has already been made. The rich own the most wealthy assets because they have positioned themselves in rooms where pre-IPO deals, private equity rounds, and massive real estate developments are quietly negotiated behind closed doors. They pay for access. They network relentlessly. They know that who you know dictates what you have the opportunity to buy. Number 9, they never sell. They only borrow. This is the holy grail of generational wealth, commonly known as the buy, borrow, die strategy. When the ultra-rich need cash to fund their lavish lifestyles, they do not sell their assets. Selling triggers a massive capital gains tax. Instead, they go to a private bank and use their massive asset portfolio as collateral for a tax-free loan. Their assets continue to appreciate at a higher rate than the loan's interest. They get to spend tax-free cash. And when they pass away, the assets transfer to their heirs with a stepped-up cost basis, entirely wiping out the tax bill. It is an infinite money loop. Number 10, they focus heavily on cash flow, not just appreciation. Speculators buy an asset hoping that some greater fool will come along and pay more for it later. That is gambling. The elite investors buy assets that literally throw off cash every single month. They want commercial real estate that pays rent. They want dividend-yielding stocks. They want businesses with massive profit margins. They focus on cash flow because cash flow gives them oxygen. It allows them to survive any market crash, any recession, and any economic winter without ever being forced to liquidate their holdings. Number 11, they capitalize on the impatience of others. Warren Buffett famously said that the stock market is a device for transferring money from the impatient to the patient. The rich acquire their greatest assets during times of extreme panic. When the economy dips and regular people start panic selling their homes, their stocks, and their businesses out of fear. The wealthy are waiting at the bottom with a bucket to catch all of that value for pennies on the dollar. They have the emotional discipline to buy when there is blood in the streets, and the financial reserves to hold on until the market inevitably recovers. Number 12, they purchase unsexy, boring businesses. Everyone wants to be the next tech billionaire. It sounds glamorous. But the quiet money, the kind of money that builds $100 million family offices, is often found in the most boring industries imaginable. We're talking about waste management, commercial plumbing, logistics, and industrial agriculture. These are essential services that society literally cannot function without. They don't rely on trends. They don't care about going viral on social media. And they consistently print money in any economic climate. Boring is beautiful when it comes to the balance sheet. Number 13, they treat their network as a compounding asset. The wealthy do not view their relationships as casual friendships. They view them as strategic alliances. They actively curate an inner circle of high-level operators, brilliant legal minds, sharp accountants, and visionary founders. They understand that a single conversation with the right person can uncover a legal loophole that saves them millions, or introduce an investment opportunity that doubles their net worth. Your network is a living, breathing asset. If your current room isn't talking about acquisitions, leverage, and global trends, you are sitting in the wrong room. Number 14, they prioritize control over ego. Amateurs try to do everything themselves because their ego tells them they are the smartest person in the room. This makes them the ultimate bottleneck in their own wealth creation. The truly rich acquire the best assets by hiring people who are infinitely smarter than they are to run them. They gladly give up a percentage of the profits to a brilliant CEO, a ruthless operator, or a genius fund manager, as long as it means the asset scales without their direct involvement. They don't care about getting the credit, they only care about getting the results. Number 15. They plan in decades and centuries. The average person plans their finances around their next paycheck. The upper middle class plans around their retirement. The ultra-rich plan for a future they will not even be alive to see. They set up irrevocable trusts, family foundations, and strict legal governance rules that dictate exactly how their assets can be managed by their great-grandchildren. They don't just want to be rich for a lifetime. They want to build an economic dynasty that defies the decay of time. They view their assets as a permanent fortress that will protect their bloodline forever. And since you have proven that you have the focus and the discipline to stick with us until the very end, Orionixer, here is your secret bonus. The ultimate asset they acquire is adaptability. The world is shifting at a completely unprecedented rate. Technologies are wiping out legacy industries overnight, and AI is rewriting the rules of the global economy. The rich know that an asset that is valuable today might be completely worthless tomorrow. So, their greatest protection isn't just the real estate they own or the stocks they hold, it is their relentless, almost paranoid dedication to learning. They remain highly adaptable, perfectly willing to abandon old strategies and embrace new paradigms the moment the winds shift. They own the future by refusing to be anchored to the past. If you are ready to stop playing small, acquire real assets, and build your own dynasty, write the word owner in the comments below. It will confuse the casual scrollers, but we will know exactly who the real builders are. Thanks for spending some time with us today. Orionix. Keep building. Keep growing. And we'll see you back here next time. Until then, take care.